We are back for another Talk About It Tuesday. And of course, we have another great question, a question that I get quite frequently. So I'm going to jump right in it and try to give you the best answer that I possibly can. So here's the question. I know I want to do real estate, but where do I start? Real estate investing is very vast, and depending on what you do, you're going to start in a different place. So the first thing we have to do is understand that real estate investing should be a means to an end. So if it's a means to an end, let's start at the end and then put the pieces in place backwards. That's always my philosophy. Start out talking about where you want to be, and then gradually put the pieces in place until you figure out where the beginning is. So if it's a means to an end, what is your end goal? And this forum is about financial freedom. So if the forum is about financial freedom, let's start there. So if you want financial freedom, then we have to understand that to gain financial freedom, your passive income has to meet your expenses. So that narrows down the field significantly in real estate because there are only a few ways that will get you passive income. Passive income is residual income, recurring income. So what ways will get you that? Well, let's talk about what will not get you that. Buying and flipping will not get you passive income because what is buying and flipping? You buy a property below market value. You probably have to rehab it, put some work into it. You put it back on the market and you resell it for a higher price. How many times do you get paid? Once. No passive income. So we're going to push that off the table for now if your end goal is financial freedom. Then we see all these ads on Facebook and internet, wholesaling, that's supposed to be the gateway into real estate. But what is wholesaling? It's flipping contracts, meaning you get a property in contract and you find somebody to buy the contract from you for a price. How many times do you get paid? Once. No passive income. So we're going to take that off the table. And we're going to take off every other means of real estate investing that get you paid once. So let's talk about some of the ways that you can get paid recurring or residual or over and over and over again. So we know buy and hold, right? When you buy a property, put it in condition for a particular demographic that it would appeal to, who rents the place and gives you rent every month. So that's residual income, passive income. So buy and hold is a vehicle. And we're going to talk about, so let's talk about what it takes to buy and hold. Buy and hold of the passive income vehicles is the most time intense, resource intense, capital intense, and requires the most amount of knowledge to pull off. And you're like, what? Yes. Okay. So what am I talking about? You have to be able to purchase it. So you're probably going to have to get funding, right? So funding can come in a lot of different ways. If you do it a traditional way with a bank, what do you need? You need to have money that's been sitting in the bank. They call it seasoned. You have to have proof of income, that you have a certain amount of income. You have to have a certain debt to income ratio. You have to have a certain credit score. You have to have money for a down payment and closing costs. And that's just to get it, right? So you have to find a location that's right, that's going to bring you the type of residual income that you want. You have to then find tenants. You have to have a system in place to manage the property. And I'm not saying you have to do it alone. You can hire someone to manage, but there has to be a system for management. And what is management? It's not only maintenance and repairs on the property, it's paying all the expenses that the property will incur. It's paying the taxes, it's paying utilities, it's paying for fuel, but it's also customer service. It's managing the tenants, their expectations. And so you have to have at least someone, if it's not going to be you, to be involved with handling not only rent collection, but talking to the tenants and finding out what their concerns are and how to make their life better so that it makes your life better. So you're also usually stuck with a 30-year commitment because you have a 30-year mortgage. That means if the property value starts to decline, which has happened before when the economy has declined, then you might be stuck with a property with a long-term obligation. You also have tax liabilities. You also have legal liabilities in case something happens. So again, buy and hold is one of the most intense, resource intense, time intense, capital intense types of investments, but it pays well. And you have a certain level of security, meaning that it is yours. And it's inheritability, meaning you can pass it on to future generations. So it has its pluses and minuses, but where do you start with that? Just like you start in any other area, you have to get your knowledge base together. You have to study not only real estate, but the market that you're in, the geographic location that you choose to invest in, customer service, property management. There are so many things that you have to have a knowledge base on. So where do you get started? Start studying that. While you are studying that, build your credit if it needs building. If it has to go up, get your credit score in order. Start getting your capital resources together because, again, money has to be sitting in the bank. Make sure you get pre-qualified to know what you can qualify for. So pre-qualified, you go to a lender, they let you know, oh, based on what you're working with now, this is the amount of mortgage you can get. You want to know that. Know if you need to get partners involved. So that's important. Get your team together. What type of team do you need for that? You're going to need a contractor. Somebody can come in and give you an estimate on what it's going to cost and how long it's going to take to put a property in the condition the way you want it to rent for a particular demographic. Study everything about the area, crime statistics, how well the schools are, other amenities in the area. What amenities that demographic that's in your area are interested in, what the fair market rents are, what the fair market value for purchasing properties are the property values increasing and what percentage. There's so many different things. Real estate is super intense, right? But buy and hold is even more intense than the other ways. So you need a mentor. You need to take classes. You need to start reading. You need to, have an understanding of the economy in general. So get on that. Do that now. Do it now, so that you have a good knowledge base, a good, pool of resources, a good team when you're ready to pull the trigger. So that's how you kind of get started with that. Then what's the next way? Rent to rent, right? Or rent with a right to sublet to someone else. So you say, well, why would I do that? Well, less capital intense because you don't need a down payment. You probably need a first month's rent and security. Your credit score doesn't have to be as high, even though a lot of landlords will look at your credit score in determining whether they will rent to you. If the location doesn't work out, you're not stuck with a 30-year obligation. You don't have to worry about taxes on the property. You don't have to worry about major repairs on the property. So when I say right to sublet, you're like, well, how can I make money subletting? Well, it depends on how you sublet it. You might Airbnb it out. You might put a government-funded program in there. You might do student housing. There's so many different ways that you can find to gain more money than what the fair market rent is. So you want to rent and try to get it below the fair market rent. And then you want to sublet it for much higher and put a profit in your pocket. So a lot of people don't realize that's real estate investing, but it's a great way to do it depending on, again, what your knowledge base is, what your resources are, what your long-term goal is. Disadvantages: you have a lease that will expire, and when it expires and they see you're making a lot of money, maybe they raise the rent on you so that it doesn't make sense for you. Maybe the relationship with the landlord doesn't work out. Maybe they want to sell. That could happen. You can't pass it on to an heir. So it has its advantages and disadvantages. And then another way, and how do you get started in that? Pretty much the same way that you would with buy and hold, except the amount of resources is a little less, and you have to do a little more study on the upsell. So find out about government-funded programs, find out about vacation rentals, find out about student housing, whatever ways that you can upsell and where those where it's most popular to do those things and what those programs are looking for in an apartment. Don't get the apartment first and then look for somebody to sell it to. That's backwards, right? We always start at the end. What program are you looking at? What vacation rental are you looking at? And then what are the amenities that sell the best in those areas? And then you find the apartment last. So that's a way to do that. And then Another way to get residual income is interest income when you become a lender, when you help finance an investor, a seasoned investor, not your best friend who wants to buy something, right? Someone who has demonstrated that they have the skills and the ability to pull off an investment, but they need funding too. So they have crowdfunding now too. There's tons of companies now that do that for you. You can just be a part of a crowdfunding program that exists, or you can find investors who always need a little extra cash flow to get their projects to completion. And you'll do that for interest on your money. So each of those ways gives you residual income, and each of them require, again, getting started, studying the economy, learning how to analyze a deal, learning how to analyze people, right? Because you got to understand how that works. You got to know how to negotiate. So developing negotiating skills, get your finances in order, build your team. If you have to get your credit score, get your credit score. If you have to amass a pool of money and it has to be seasoned, get that together. So that's how you get started in real estate. And I've kind of put it in a nutshell, but you have to understand real estate is a numbers game. And if you don't have the patience and wherewithal to go through it, then real estate is not for you. There's no quick and easy money in real estate. All money in real estate is earned because it is hard, it is time intense, but it pays off well. So there's a ratio that we use in real estate, 100 to 10 to 3 to 1, meaning you'll have to look at 100 different properties before you find 10 that are worth making an offer on. You'll probably make an offer on 3, or 3 will get accepted, and then you'll probably close on 1, and then it starts all over again. So there's a lot of analysis, and a lot of that can be done quickly. If you have formulas, I use formulas. You can analyze 100 properties really quickly because if they don't have certain criteria, you go through that list rather quickly. But then you get down to that 10. And of that 10, again, you might make offers on the 10. 3 might get accepted. Only 1 is worth closing on, or maybe you only have the ability to close on 1. So hopefully that answered the question. That's how you get started in real estate, but that's not how you get great in real estate. It just takes years and years and years of doing it in various economies and various geographies. So keep the questions coming, and I will see you next Tuesday.